Hey, good afternoon, traders. This is Trader Tim from E-mini Mind doing a trade recap video. It's the 22nd of July, Thursday, 2021. And before I get into some trades from this week, just wanted to touch on the daily ES chart here. This steeper blue trend line, we came down earlier in the week on the gap down. Also happened to come close to the 50% retracement of this next retracement on the daily. If you look at the opposing, so the short setup, we broke through that pretty handily, broke through that 60 with 8. I do think we'll be able to make it into new highs, but very possible here that we roll over first and sort of do a little bit of a head fake, maybe come down to this uptrend line once again. If I take another retracement from lows to highs, that would kind of put it at the trend line. If I go from this low to high on the daily, that kind of 42.91, we just call it 4300, should act as some nice support if we come down. Also notice this day over here on the 8th would kind of line up with that candle if we did get a little bit of a pullback. So breadth and advanced decline line today are pretty bearish. So um, watching for a rollover here into Friday. If we look at the gaps, what we have unfilled today, we filled yesterday's gap. We've got one below us, 43.1950, one above us, 43.68 and a quarter. Both of those are pretty close, so should act as some good targets if we start to roll over to the downside. Should have no problem hitting 1950. If this breadth and advanced decline line does change this afternoon and we get bullish, we should have no problem hitting 68.25. If not today, tomorrow on Friday. Next week is the Fed meeting announcement, which may stall things out in the beginning of the week. Usually the Tuesday and then the Wednesday morning is pretty slow. So we'll be doing our live trading session on Thursday. You can check that out, eminimind.com/VIP. So let's get into a couple of trades from this week. Tuesday. So I didn't take this trade, unfortunately, but let's go to Tuesday here. And I just wanted to highlight. So on Tuesday morning, let me go to the daily chart here. Just so I had a short or a put position on to hedge to the downside. I took that off in the morning on on Tuesday because we had gapped up at lows. So I closed that position, took profits on that position. I bought a little bit more in my long-term account. So the position that I'm hedging is the VUG, just a basic growth stock in Vanguard growth stock. So that's in my longer term account, hedging to the downside. So picking up a nice little gain on the move down, and then closing it out, buying more shares with some of that capital, and then when the market returns to where it was, your account is higher. So that's the general strategy. And the important part is the gap up at lows. So gap up after a downtrend could be said another way. This is the first 15-minute candle, and here is the closing bar on Monday. And so once we put in that first 15-minute candle and then break above it, I like to get long on a situation where it's a gap up after a downtrend. Unfortunately, on Tuesday, I was doing a few other things, plus the trading session. So I closed out the put position. I added to my long-term position, but I didn't have quite enough time to get in on a basically just do one tick above that 15-minute candle's high. And so that's a good way on the 15-minute chart to get into the trend early and then just trail your stop below each 15-minute candle, and that takes you up in Tuesday's case to like a 43.0550. So a nice move on Tuesday. I ended up with a counter trend short a little bit later in the morning, but other than that, kind of difficult to get into longs. So it's helpful to be able to get into these trends early when they do gap up at lows. On Wednesday, another bit of a gap up. Now this gap up not necessarily at lows. This gap up we've already trended up for a while. The trend had changed. And Tuesday, if I go to my chart, 736, go back to Tuesday. Tuesday was a long, and yes, so Tuesday was the halfway back. I'll go to the 5-minute chart to give us a little more data here. Tuesday was a beautiful halfway back of the day. We pulled back right to the 50%, 43, 34, and then set up. Actually, the bar didn't even change to red, it stayed green, but this was the setup. So we broke the swing high over here, took about 2-3 minutes for us to rally and then make this little pullback, and then I was able to just trail it really not that far because we got this little dip here. So ended up with first target and then another 2 points on top of that per contract. So decent little move, but the market didn't really go straight up from there. You can see a lot of sideways action through kind of the rest of the day, really. So generally up on Wednesday, but not as strong of an up move as we saw in the morning on Tuesday, where like every single candle is making a new high. But nice little long there. And then today was pretty nice. For as sloppy as the morning was, or it's like the first handful of bars were. Opposing tails, big body green candle, big body red candle. The first one was shortly after that 15-minute mark. Whoops, gotta go forward to today. So it was like 17 minutes after the bell. We had a nice double top that set up in a short. And you can see the high of the morning just right at the open was just a tick above that. And I just felt like it was a really, for as messy as the 5-minute candles are, or for as like, maybe not messy is the right word, but opposing, we sold off and then we rallied. The 512 tick chart actually looked pretty good. So we broke the swing low here, bounced to the 50%, 43, 52, 25 was my entry, and then just wrote it down to trailing the swing highs here, and this is where I got taken out, right above here. So that was actually 3-point first target and then another 4 points on the trail stop. And then from there, we were in this nice series of lower highs and lower lows. Notice how we broke the swing high here, and we kind of were at the bottom of the range and set up long. So I took that one, 43, 46, 50. Spent a little bit of time chopping around here, a couple of minutes, but then got a nice quick pop and then kind of pittered out. So again, that first target on half the position is 3 points. And what that does is lock in a little bit of gain, reduce your risk, basically give you a guaranteed winner, and you still have half the position to trail. So the second half of that position, my trail stop was just trailing the next 61.8 like this. And so ended up with another half a point on the trail stop. And so if the market keeps running, you've got that runner ready to go. If the market rolls over, you've already taken a little bit of profit and you can come away with a winner. So not a bad day for what it was. If we go, it's actually another short setup that traded right kind of at that 90-minute mark. We came down into the first 30-minute range, so this 43, 55 and a quarter, that's the top of the first 30-minute range, came down in there, bounced, and then set up at the 50%. Again, got a little bit of a rollover, but then this spike here kind of breaks the swing high, so not the cleanest of days, but still keeps you, it gets you a first target and then some. And even within the range, if we draw up like here, this one traded 43.50, we call it 51 and got a pretty swift move. So not a bad day overall on the 512 tick chart, even though the 5-minute chart was a little bit sloppy, and it really looks sloppy with my drawings up there like that. So that's what I have for you today. If you have questions, drop them in the comments below, and you can tune into the live trading session each week, emoneymind.com/VIP. Thanks, and have a great rest of your week.